And I'm Jonathan with IVolLive. If you have just joined us, this is the screen you'll see when you log in. This is your dashboard. We have our nice IVolLive concierge here tipping his hat, kind of telling you where the different key tools are. So just based on personal preference, you can either you can access these tools either on the left here in this column or down here. This is kind of like your IVolLive toolbox, so to speak. Just shortcuts to access our most popular tools. IVolLive is like the brain and the heart of the program. Everything kind of derives from the data that IVolLive pulls. If you're a data customer, you're very used to that. You can also expand, contract these views, kind of depending on your personal preference. We also, for any questions, comments, concerns, we're at support@IVolatility.com. Also, if you're not a current subscriber to IVolatility, let's say you're on a trial or you found us online, or for an example, you can just reach out to us at support@IVolatility.com, and we're happy to get you set up with a subscription. So here we are. This brings us to our dashboard. The best way to join us on these webinars is here, join free IVolLive Q&A webinars. So basically, when you click on that link, what you'll see is we update this throughout the week with our webinar topics. So today we're doing our overview, of course, so that's now disappeared since we've started. But next Tuesday is our real-time spread scanner, which is a really, really cool tool because you can apply this right away to put on actionable options trades. And really, that's what IVolLive is all about, is arming you with data, analysis, charts, technical analysis, and sentiment to be able to do all the hard number crunching to then empower you for your trading, your options trading. So for an example, I'm an active options trader. I use IVolLive every day. This is my research engine. And then I go to my broker and put on the actual trade. So that's a really good resource to register. We only have a limited number of seats each webinar, so they don't get out of control. So I just encourage everybody to register for those in advance if they can. Other things that we have here is the latest news. So this is working even over the weekend. You can see no days off for our news column. This gives you a couple sentences with what's going on. Typically, I like to kind of skim through this as I'm drinking my coffee. I also come over here. I look at the latest editorial that we've put out. So this is us using the IVolLive system to find interesting trends, interesting ideas. We put this out every Monday, and you could see this Monday, what was heavy on our minds was inflation data, early earnings beats, and volatility, which we'll highlight today. This drop in volatility, which has been interesting. So you'll get some editorial, some charts. Analyze some of the fear gauges. In this case, we're analyzing the VIX, something we watch very closely. And then it's how to play it. So it's like, okay, great. You have all this data, you have all this, analysis. Well, how do you make money from it? So we like to put different kind of actionable ideas there. And then if you're logged into your Twitter, you'll see some of our latest tweets. We are at IVolatility, so at IVolatility, and we put out different trends and interesting spikes in implied vol. We are named IVol after all. And it's a great way to get kind of some interesting ideas. We're also on Reddit, r//IVolatility. We're retooling our YouTube page, which has all of these past videos on it. So that should be ready within the next couple of weeks. And then that'll be live with our whole library, our whole catalog, so to speak. So that's the dashboard, just quick, easy shortcuts to get you where you want to be. Again, any given Tuesday, we focus on one of these topics, whether that's IVolLive, underlying sentiment analyzer, P&L calculator, real-time spread scanner, backtest data download, and daily updates. So what I like to do on these Saturday sessions is just kind of touch on these within the context of the trading week, and kind of some interesting data points. So, first thing I'll do is I'll go to IVolLive. Once I kind of skim through the headlines, I come here and I'm always looking for interesting ideas. And so I'll run different scans. Before I run scans though, the two charts I like to look at are the VIX. I like to see what's going on because this is such a widely followed index. What's great about IVolLive is we can create custom VIXs and custom fear gauges per name. So we can literally create a VIX for any stock that we want. Coinbase, Pacific West, PayPal, Tech Resources. Those are some examples that I have pulled up. So I'll show you guys how to do that. But basically, VIX is one of the first things I look at. I like to look at the trend, price at 17, it's relatively low. I can expand this view by clicking on those 4 diagonal arrows. And here, what you'll find is this is a really neat chart. So this is literally one of the first things I do every morning. I come here. I like to look at the 1-year chart, but check this out. You can go as far back as 5 years. And what's so neat about this is pricing is in blue. So this is the VIX price. Historical volatility is in orange. And then implied volatility is in green. And you can see you can toggle between all these different. If you're a short-term trader, you could do like IV7. Long-term trader, you could do, IV of 720 days. Then you have our historical volatility measures here. So you can toggle between that. But the most common is typically IV30, which is looking 30 days into the future, and historical volatility 20. This is looking at volatility that's already happened over the past month. But look at this. This gives you 5 years of data, just from this chart view, which is fantastic. So you could see, where there was spikes in price, there was spikes in implied volatility, which makes sense because as the VIX is going higher, that typically coincides with fear, and fear typically coincides with the S&P or the market selling off. So you'll see this correlation here. And then again, you could go 1 year, 6 months, 3 months, 1 month, 24 hours. It's really, really cool. And then what I'll do is I come here kind of on this 1-year chart, and I like to get a temperature gauge. So I could see that, volatility here, the price is in blue again. This is low, so the market is kind of calm and complacent. So this one chart tells me that options prices are going to be pretty cheap, with the VIX being this low. So I could go long volatility. I could use this as a moment to hedge my portfolio, by buying protective options, protective put options, right? Whereas if the VIX is up here, I know now is not a good time to be buying protective put options, right? It's too late, should have been buying down here. So I like to use this chart. Other thing I like to do with this chart, which I showed on Tuesday, is I like to isolate implied volatility. So this is the VIX's implied volatility, and this will give you indicators on where the market's going to go. Because, for an example, when we add Bollinger Bands, just 2 very simple ones, and relative strength index, we could see that the VIX is in the middle of its range, right? So right now, here in March, as the banking crisis went crazy, on the regional banks, we saw this big spike in volatility. And as soon as I saw it go above the upper Bollinger Band, I knew it was inevitable that the VIX would retrace at some point. So this was a great reversion of the mean moment. With today's market, you could see we're kind of in the middle. There's really no indicator. On Tuesday, I said, look, like sometimes this tells me, not to make any trades because there's no clear trend. So, overall. And so what I'm looking to do is not trade the overall market. Maybe when I see the VIX like this, I'm looking at individual names and one-off opportunities. So another chart I like to look at kind of hand in hand with that, or another name kind of before I run any scans, is the SPY. So SPY is our S&P 500. So you come here, you have all the fundamentals on the left. You'd have the option chain down here. Once it loads, there's a ton of options for SPY. So sometimes that takes a while, but I could come here and I could rebuild that same chart. So here's our 1-year chart, and I could get rid of historical volatility. I could get rid of price, and then I could add those 2 indicators that I had for the VIX. And here we go. And I could see with SPY, we're kind of in a similar position, right? Like the market's building up for a move. It's in the middle of this range. And so again, I'm not trading maybe the overall market here. If we were at this moment, again, in March, I'm trading, my analysis is going to say, look, we're at this huge spike. We've broached the upper Bollinger Band. I'm now going to put on a trade, a reversion to the mean trade, or I'm going to go short volatility, essentially betting that it's going to come back within this range. But where we are today, I'm not trading the market overall. So in that case, I'm looking for individual names, which is great because that brings us to our stock monitor. So the stock monitor is where we go to run scans. You can do it against the broad market. You can do it against custom groups. What I like to do any given trading session is I create a new group. So click on that new group button. And we'll say May 13th, trading ideas. because then as I run these scans and I find things that I'm interested in, I can easily add to this group. So right now, clearly it's blank. And this is another reason why, go here, just get this zoom bar a little bit lower so I can play with the tabs. So this is another reason why too, I like to have multiple IVolLive tabs going, because I can have one tab on my browser pulled up for that group. And then I could come here and I could start adding to that group, right? So you're able to have as many IVolLive browsers. Sometimes when I'm doing a very active trading session, I'll have, 5 or 6 tabs for IVolLive on my browser. So. And then within IVolLive, you can have multiple tabs. Of course, you could see at the top here, I have 4 for charts, and I have, these individual names. So just kind of personal preference. But right now, again, this is blank because we haven't added anything to it. So now we got to find, interesting trading ideas. So the couple things that I do is I run this scan, top stocks by volume. It's super simple. All you have to do is click on it and then decide how many results you want to see and what grouping do you want to see those from. So in this case, the system just ran all the numbers on the Dow, DJX. And what this will do is it will sort by options volume. So you could see on Friday, Apple had the most options volume with 915,000 shares or contracts, traded, which was, almost 3 times as many as the next runner-up, Microsoft, and then Disney was in third. So this is really cool because you could see where the action is. You could do that for any of our available groupings, which is, all ETFs, all US indices, all US stocks, Canadian stocks, German stocks, European stocks, tech stocks, Indian stocks, Russell 2000, and then Toronto TX60. So you could run that, let's say you're trading the Canadian exchange. You could run that here and you'll see the top was Tourmaline, if I'm saying that correctly, then Brookfield, Canadian Pacific. So it just depends on what group, but you could see where the action is. A lot of traders like to see, okay, where is the most action in a given day? And this is how you would do that. Top stops by volume. Next, I look at IVX mean versus 20-day historical value. So historical volatility. So it's a bit of a mouthful, but really all it's saying is, where does the future look different than the past? So the future is IVX 30, the past is HV20, and then this puts it in ratio format. So this puts it, in numerical form. So what this is saying is Walmart has this, implied volatility that's almost at 23, yet its historical volatility over the past month, HV20 was only 7.23. So there's this interesting spike in volatility looking out versus the past for not only Walmart, but Coca-Cola, Salesforce, kind of is kind of my barometer here. So Walmart looks like an interesting potential trading idea. So I would jot down that ticker, WMT. That'd be my only takeaway from here because everything else is below 2. IVX historical range. This is great because it gives you the kind of the 52-week range instead of the stock price. It gives you the 52-week range of the individual implied volatility. So you could see, this first name CTLT had a low of 34.42, but a high of 100.43 on its volatility for implied vol. So look, at this current reading of 104.71, we're at an extreme. It's broken out to an extreme, which means something's going on here. Like there's a reason why this name is breaking out above its 52-week high on implied volatility. Same thing, VFC, same thing with Dish. Dish has been up here for the past few weeks. So that means something's going on there. I'll jot down DISH. And then I'm just going through, I'm looking for names that I'm familiar with. And then I'm comparing their current implied volatility, which is here, with their IVP and their IV rank. And what IVP and IV rank is, I don't want people to get lost in the weeds or confused. Essentially what these are is they put this number into context because, if you're at 104.71, it's like, so what? Is that high? Is that low? And IVP says, okay, over the past year, what percentage of the time has this stock traded below this implied volatility level? So for an example, with CTLT, it's traded below 104.71, 99.6% of the time over the last year. So you can see this is an extreme. I use kind of 80 as my dividing line. So you could see target wouldn't quite make the cut. But these top 4 or 5 could be interesting. I'm not as familiar with some of these names, but I've traded Dish before, so I jotted them down. Then moving on, IV exchange from yesterday. This is cool because it shows you kind of in real time where the action is, like what's happening day over day. And it's putting, it's giving you the absolute amount of change, and then it's putting that into percentage formats. So this is the IVX. This is how many absolute points it changed, and this is that expressed as a percentage term. So you can see NWS had this, big jump, 58%. For an S&P stock, that's high. Anything kind of over a 10% overnight jump is high. So you can come here and just find interesting names. Oh, there we go, CBOE, which is an interesting one that I've traded before. So I'll jot down CBOE. So just by running these quick scans, like for an example, Walmart and CBOE weren't necessarily on my radar. So by running these quick scans, I have two interesting trading ideas. So now what we can do is we pull up that other tab on our browser, and we're able to add. This is how you add manually, and then I'll show how to add with a couple mouse clicks. So we're adding Walmart, we're adding Dish, and we're adding CBOE. So you can see we went from 0 ideas to now 3 ideas within just by running those quick, simple scans. I come back to my other tab. Now, this is how you run a custom scan. So, you read it left to right. This is how you would add symbols to the group. This is how you would delete symbols to the group. This is how you would add from a file to the group. So continuing left to right, you're always going to decide with your screener, do you want to run that against all instruments? Are you specifically looking for implied volatilities that are moving higher? Are you looking for implied volatilities that are moving lower? Are you looking for high call volume, high put volume, highest call to put, highest put to call? So these are the different things as a trader you'll decide. Whatever is most appealing to you is what you'll run against that. Now, you can run that against this custom group we've been building since the start of the webinar. Or, what I like to do, I like to run it against an index and then add to my custom group. So I'm going to look for, interesting things. If you just leave this as all instruments, what you'll see is, you'll have these columns populate. You'll see the name, you'll see the closing price. This is the stock price. So the closing price of the instrument. You'll see, dividend date, dividend amounts. So, the way to customize these columns is with this gear icon here. And you could see when I was running this screen on the stock monitor, really what I was looking for was dividend. This is a dividend screener. And so you say, well, how'd you create a dividend screener? And this is how you decide what you want to screen against. There's going to be certain defaults, which is, here on this particular tab. So the default, for an example, is, this is a plain vanilla screen. It's all instruments run against the Dow Jones. And you'll see, the default is going to give you the exchange, close price, the last price, markets closed, of course, option volume, call option volume, put option volume, options open interest, call option open interest, put option open interest, and then so on and so forth. We have our historical volatility, implied volatility, so past versus future, and then the day over day change, which we showed over here when we ran these particular scans. But those fields are also available to you here. And that's one thing I want to point out about our platform is that the data is available in a couple different ways, to you. So, that's something to always keep in mind. There's multiple ways to get what you need. But, again, I like to run these scans on these custom tabs first, and then I come here and I decide what data I want to see, because from this view, you're able to filter. So you say, okay, well, who had, so from this data, you could say, well, who had the most options volume? Who had the least options volume within this scan? So you could see Apple had the most, but we also saw that here, top stocks by volume. So there's different ways to screen. You could say, okay, well, who had the most call option volume versus put option volume? And that was Apple here. And then, again, all these different things. Then from here is how you would create the custom view. I like to leave this as a default, which is why I came over here and I created a custom scan. So what I did is I came here to column settings and I decided I only wanted to see dividend and market cap information. That means I left everything else red. I just wanted to see company name, so I knew what I was looking at. I wanted to see any available information we had on dividends. And then I wanted to see last price I wanted to see market cap, and I wanted to see previous close. So I could even say, look, I don't care about price. I just want to see dividend info. I could hit apply and it will save it to this one tab, or I can do save as default. And what that'll do is anytime I pull up the stock monitor tab, those will be the fields that I see. So if I hit apply, check this out. This is a really, really cool screen because all it's showing me is dividend information within a certain group, which is S&P 500. So now what I could do is I could filter by dividend date, who's got the furthest out, who's got the most recent. I could filter by dividend amount, who's the highest absolute amount. In this case, it's BlackRock, $5 a share. And then we could do frequency as well. And then we have our market caps over here. So those are really, cool screens that you could run, and you could run that over here as well. You could come here with our custom group and we could decide exactly what we want to see. I've already got dividends, enabled here. And so then I could sort, I could say, all right, well, out of these three, only 2 pay dividends. So typically as I build out a list, it gets to, 7, 8, 9, 10 names. So let's go ahead and do that. And then we'll run some custom scans. So the other cool things you could do from this custom group, as you find names that you're interested in. For example, I have been researching Realty Corp. Apple showed up a couple times on our screens, and AbbVie is one that I've traded a lot in the past too. So let's just say these 3 stand out to me. I can add them now to that custom group. So let's hit the add. We go to our May 13th trading ideas, hit add. And now if we come over to our separate tab, we have on our browser, look at that, those 3 added just with a couple mouse clicks. Now let's say, look, we don't want, one of these anymore for whatever reason. We don't want AbbVie. The way to eliminate that would just be, there we go, select it and hit that little trash can. The other thing you could do too, just while we're here, is you could add a group to a file. So let's say you had an Excel file going, with a research list or whatever. All you need from that CSV file is the ticker symbols listed out. You would open file, select the group you want to add it to, hit add, and then those names would be added as well, to that custom group. So I showed that in our last webinar on the stock monitor. And then again, here's how you would customize the different fields available. So, speaking of customization, you can also do it here under screener. One of our most popular things is breaking out implied volatility. So we could say, all right, looking out over the next month, using an IVX30, what names have broken out within the S&P more than 10%, right? So this is going to show us where volatility is kicking in. And here's our list, so it's not really a super long list because that's a pretty strict criteria. We could go even further. We could say, all right, well, instead of 10%, are there any names within the S&P 500 that are breaking out 20% with implied volatility? You can see our list is getting shorter as we get, more strict. But look what shows up, Bed Bath & Beyond, Best Buy, Campbell Soup, Cisco. So I would probably eliminate Bed Bath & Beyond because it's a bit too risky for me. Or Bath and Body Works, sorry. Like retail has been a little bit too risky for me, but certain names like Campbell, Cisco, I'm a pretty conservative trader. I'm looking for, consumer staples or these big tech companies that don't have a lot of debt. So these kind of stand out to me. You can see we have a lot of retail in here though. Dollar General, Home Depot, Bath and Body Works, etc. HP I've traded. So, I like big tech. I like consumer staples. Everybody needs soup. So I would add maybe those to my trading ideas. And again, that's going to automatically populate. And that's great because this is telling me that there's going to be action within these option chains because, we're only looking for breaking out implied volatility. So I could have interesting, the key takeaway is there could be interesting opportunities to sell puts against these names because they're going to have inflated premiums. And if I want to buy them anyway, I might as well get paid to buy them. And then on the other hand, when I'm looking to go long, I look for collapsing IVs. So I want to know where is implied volatility going lower so I can buy options very cheap. So let's see, just for the fun of it, if we have any names within the S&P dropping by 30% with implied volatility. Oh, here we go. Realty Income, which we had already added. American Airlines, Apple, which we had already added. I bought Laboratories, which is one I've traded in the past. So I would not mind going long them. Accenture as well, the big consulting firm. and Aflac, let's say a big insurer. So now I could say, hey, I want to go long on these names. Their implied volatility is collapsing, so it's going to be cheap to go long. So let me go ahead and add those to our group. Here we go. So now we've added those. And so those are how you use kind of these different screeners here. High call, high put, I tend to use just from that default screen because it's easy to look at these ratios. I also pull that here, top stocks by volume. But now you can see we've built this handy little list here. So we could take it a step further and we can now add some of these names that we were looking at before. So we looked at Coinbase, so you can add manually. I just want to demonstrate how to do all this manually and with a few mouse clicks. We looked at PayPal, and then we looked at tech resources. So those are kind of some of the names that we've covered. And now look, we've got a neat little list here that we can further analyze. So let's say, we've seen what we need to see with dividends, right? We know the majority of these names pay a dividend, some don't. We know the dividend date, so we've done our analysis there. Here, what we could do is now we can, we no longer need these fields, but now we're interested in interesting trends for implied volatility, let's say. So what we can do here is you could also add things like beta. This is all alphabetized. So, if you want to know, for example, I do like to look at beta. Sometimes I could do beta 30-day. How does the name trade relative to the S&P 500? That could be interesting. Company name is important, so I know what I'm looking at. You could look at correlations. How is it correlated to the market? Cumulative price, dividends, which we just had. I do like to look at, in my case, I'm kind of an intermediate term trader. I like to look at historical volatility 20, like what's been going on over the past month. But again, depending on, an HV measures trading days. So HV20 is like 30 calendar days because there's 20 days in any given month that the market's open. You could also look at, if you like to look at historical volatility, the same way I described implied volatility, IVP, you could use historical volatility percentile if that's something you're interested in. So here is our IVP. So let's go ahead and click that. Now we need our IVX. Again, my favorite is the IVX 30. So let me get to that. And again, if you're a short-term trader, you could do 14, you could do 7. Just kind of depends on what you're most interested in. For me, I like IVX 30, but we are named IVolLive, as I mentioned. So we have a myriad of implied volatility measures that you could choose from. Here's the IVX high-low, kind of that 52-week range that I showed earlier. We could look at last price, which I do like to know, last price of the underlying stock. Market cap, I tend to trade larger market caps, so I'm not really that concerned about what's going on with the market cap. But if you trade thinly traded stocks, you could have that pulled up and you could screen accordingly. So I'll do last price, so I don't need previous close. And there we go. So let's hit apply. And you can see all of those updated. So I still have a very simple screen. It's not overwhelming. But I have our last price for the instrument, for Apple was 172.57. I have our historical volatility, I have our IVX, I have our beta, and then I have our implied vol IVP. So this is all very interesting, right? Because now I could say, well, who's trading from this list with the highest absolute implied volatility, which of course, no surprise, is PacWest. But then I can also say, well, all right, who's trading at a historically high range of their implied volatility? And anything, here, the higher the number, the bigger an outlier it is. So I could see PacWest, Dish, and Cisco are our top 3 trading outside of their historical range. I could also say, well, who's most volatile relative to the S&P right now? And of course, that's PacWest. On the other hand, the least correlated is Campbell Soup. It's not trading in line with the S&P over the past 30 days. So this is all really, really cool stuff that we can now use to dig a little bit deeper. So now, let's say we want to do that. Let's say we want to, jump a little bit deeper. One thing I thought was interesting was PayPal prior even to adding it to this list. And the reason is they just put out their earnings. And so here, when you click on a particular name, you could see with PayPal, all of our fundamental information here on the left, things like price, IVX, market cap. The way you can add to or take away from the fundamentals is just this gear icon. So you can see, again, in alphabetical order, these are the different things available to you on the fundamental side of the equation. Here's the options chain, which we'll look at in a moment. And then here's our chart. And so what I showed on Tuesday was, this is my favorite view to access the chart for technical analysis purposes. So again, what you'll get as a default here is you could go up to 5 years worth of data if a stock has been public, for 5 years, of course. And you'll get historical volatility in orange, you'll get implied volatility in green, and you'll get price in blue. So you could see here, even looking at this 5-year chart, there's this huge spike, and this is what caught my attention this week, was this big spike in volume. Price went down. So now I want to drill a little bit deeper. So if that's evident on a 5-year chart, this is like being in a spaceship and looking down from space. If you could see big trends like this from space, something's going on. So that's how PayPal ended up on my radar. I could come down to this 1-year chart, but since earnings just came out, let's get a little bit more granular. Let's go down here to 1 month, which is perfect. So you could see price in blue plummeted on the heels of earnings, but earnings weren't bad. It's just, the market reacted negatively, and the market can be a fickle beast. And so this shows, as the price has gone down, historical volatility was rising. Implied volatility hasn't really quite picked up speed yet. So that's very interesting. There wasn't this massive spike in implied vol, which tells me PayPal's likely to rebound. So the different things that I could do with this chart, I can now draw on this chart, to kind of tell me why I'm interested. And I'm interested in this big gap between historical volatility and implied volatility, because I probably want to go bullish now on PayPal. I think this sell-off is overdone. So I can add this. The other things I could do from this view, I can do, trend lines. So we could say, for an example, here was our kind of short-term resistance on PayPal, and then it just absolutely crashed. One of the things I'll be looking for now is I'll be looking for PayPal to come, out of this downtrend that's here. So, from these views, you're able to customize them like crazy, depending on how much of an artiste you would like to be. In my case, I like to say, what direction is something going? So I'll typically use this directional arrow. This is telling me it's a downtrend. The other things I like to do sometimes is bulk up, the width of the line, make it a little bit more clear to me. So those are the different things you could do. But, this really showed up as a very interesting trade, specifically because I think, had implied volatility also skyrocketed higher, I don't think I'd be so bullish. But, I'm neutral. I'm mildly bullish to neutral on this, but I think now could be an excellent entry point to enter PayPal. So let's say that's my working thesis, from the fundamentals, which I like, and from the chart, which I like. Then what you could do is you could come down here and say, look, with implied volatility still relatively high, but not spiking crazy, that to me is like a Goldilocks scenario to sell a put, right? We're not too hot, we're not too cold. I do want to buy the stock, but I want to get paid to buy the stock. So what I could do is I could look at the next expiration out. That's May 19th, just for an example. The way to read the options chain here is you could look at leaps, which are long-term options. You could look at the next 2, next 3, next 4. I want to get into PayPal pretty soon. So maybe I just want to look at the next 3 expirations. I don't want to look at all of them. You can see that just got much easier. Scroll bar got much smaller. And depending on some, I'm an at the money options trader. I like to know what's going on around the current pricing. But if you are more out of the money, you could choose a different mid price here. You could say, all right, let's change this mid price to 70, for an example. And then you'd see the 5 strikes around 70 versus the 5 strikes around the present, value, 61, 69. So this is how you would change how many strikes you look at. I liked 5 works well for me. And then you could look at, if let's say you only wanted to go long, you only wanted to go short, or you only wanted to hedge, or you only wanted to sell a covered call, you could decide, call or put. I like to look at calls and puts, and then the information available to you. You click on this column. And in my case, what I like to look at as a trader is alpha. I like to look at the ask. I like to look at the bid. Again, since I'm trading pretty liquid stocks, I don't really care about the ask size in this particular case, or the bid size. Delta, I like to look at, to measure the sensitivity to the underlying instrument, in this case, PayPal. I do like to look at the implied volatility for each option strike price. And then the other things I like, volume, it's helpful. You can see how many trades, are happening within a certain strike. And then also, let's see here, I go to row, which is one that was also very interesting, that's come up. And then let's say you wanted to key in something like theta, for an example, which is time decay. I could do that and then hit apply. And so all of those fields have now been added. We have rho, we have alpha, we have theta. And so again, this is how we can interpret it. So for me, my entry point, I think, the current price for PayPal is a great entry point. So, I would maybe go, I can decide, do I want to go at the money at 62, or do I want to, come in at a little bit lower price? So if I'm selling this put, do I want to sell it at 62 or at 60? And the way that it could help determine that decision making is by clicking on this calculator, because now I'm going to see the probability of being put at certain prices. So for an example, I pull up this calculator for the 62. This is really the at the money strike. And I could say, okay, what are the odds that PayPal is going to be trading below price one? So below the strike price 62 by expiration, which is, May 19th. Also, since I am, neutral to mildly bullish, I like to put a higher number in price two to see what are the odds that, PayPal will be above that price. So you can see, our computers do the math for us. There's a 55% chance PayPal will be below 62. So, there's a 55% chance I'll be put, is what that means in practical terms. On the other hand, there's only a 10% chance that the price will be above 65. So then I could say, all right, well, I'll get paid, $1.18 per share to agree to buy PayPal at 62. So really my entry level is like $60.80, 62 minus $1.18. Or I could look at the $60 price, strike price. I could say, look, I'll get paid, probably the split between the bid and the ask. I'll be paid 45 cents here. So really my entry price would be, 59.65 for an example, on this. So what are the odds that I'll be put? So I could pull up the calculator here, and instead of 62, I would put 60 for my price one. And then maybe I could put, 63 here for price two. So we could see there's only a 24% chance I'll be put at 60 versus our last one, which was like 55% chance. On the other hand, I'm only earning 45 cents a share instead of $1.18 a share. So that's always the trade-off. The more likely you're to be put, the higher the payout. The least likely you are to be put, the lower the payout. So that's kind of the math that we're running any given trade. In my case, I like this idea of getting in below 60. So 60 minus the 45 cents I'd be paid to get in. My cost basis is around, $59.50. I like that. So the other things I could do here with this calculator, I could come on the options calculator side. We do cover American and European. I would say most of our users trade American style options, which just means you can exercise anytime up to expiration. European would be like the VIX. You can only exercise at the expiration date. PayPal, of course, is an American style option. So let me have that refresh there. Just clicked on, the screen and cleared it out. And so here we have the last price of PayPal. We have the strike price we're looking at. We have the days to expiration and implied volatility. So this is cool because we can say, look, if all else stays equal, what is this put going to be priced at 3 days from expiration? And you can see it'll be priced at, 23 cents. So we'd be up almost 50% on this option, if implied volatility stayed the same and if PayPal stayed the same. This is one of the powerful things about trading puts, right? This theta, this time decay really kicks in and the option price decreases. We could also say, well, wait a minute, what if PayPal has a spike in implied volatility from 32 to 42, 10 absolute points in volatility. And you could see, even though we're only 3 days to expiration and time decay is kicking in, this spike in implied volatility would mean, we're basically break even though we're only 3 days out, even though PayPal's at the same price, that spike in implied volatility has a big impact on the option price, which is what's great about this platform is you're able to look at that and customize that. So, the key takeaway would be, I'm very unlikely to be put. I'm very likely to be able to keep that whole income from selling this put at 45 cents. So that'd be 45 bucks a contract, since each option contract covers 100 shares. So I'm feeling pretty good about this. So now what I'll do, the other things that you could do with this option chain view is you could look at some really cool charts. So this will show you the bid, the ask, and the last price for that specific option here, the $60 strike. You could see the price went down throughout Friday, which makes sense. Then implied volatility, stayed, kind of consistent, but as the trading day went on, kind of trended lower. And the other cool thing in my favorite view is table view, because this shows you the time, the bid, the ask, the last price, the implied volatility that the trade took place, and how much volume, so you could come and you can see, these blocks of trades where they happened, and you can see an overall trend. This was a pretty liquid trade on Friday. So that's really cool, and you could do this for anything you're looking at. We're using PayPal as an example, but you can follow that same protocol for any stock you're interested in. And this is the time skew. So what this is showing you is, options that are maturing 14 days from now, 28, 42, 70, 161, 469, 52. This is showing you the relationship between calls and puts over time, using their implied volatility here on the y-axis. So you could see, it's pretty tight with PayPal for implied volatility until we get out to, 400 days from now. That's where we start to get some separation, but it's still relatively tight. You could look, it looks big, but it's only, 3 absolute points, 42 versus 39. What I look for is like 10 points or more, because that tells me that the market is uncertain where the stock's going to go, whether it's going to go higher or lower. So these are really cool charts that are at your fingertips. You can isolate for just put, just call, put and call. So I like to look at that for any strike that I'm interested in. Then what I do next is I look at sentiment. I say, all right, I have my trading theory. I have the stock that I'm interested in. I go to this, the sentiment analyzer here, and I do that in a different tab on my browser. That way I don't lose the work that I'm doing here. So I just pull up this different tab. From here, you're able to type in the name. So we've been looking at PayPal. I'll get kind of the sentiment reading. It's bearish, which makes sense because it took a dive after earnings. It's slightly volatile, which we saw with implied volatility not spiking higher, which is great. Slightly volatile is like my calling card for selling puts. It's that kind of Goldilocks scenario. Here, if I'm in a rush, if I don't have a lot of time, I just skim through these, which tells me, this is always running from a scale, the bullish rank and volatile rank from a scale of 100% to negative 100%. So anytime I see something that is at those absolutes, I know typically I could put on a reversion to the mean trade, because it's unlikely that they'll stay at those extremes unless they're going bankrupt, for an example. So we've seen that with some of those regional banks, they hit these extremes and then they went under and the Fed stepped in. But anything in the middle of those two ranges is, again, kind of a Goldilocks scenario. So at 22 and at negative 33, I'm feeling good. And then this summarizes everything for us. How many buys, how many sells, and how many hold signals do we have for any given name? Again, in our case, PayPal. The way to read this is buys are green arrows. A double buy would be a green arrow with a thumbs up. Sells are red arrows. A double sell would be a red arrow and a thumbs down. And then holds are these question marks. And then here you'll see, the first paragraph will tell you recent price action, which there was a decline, on the heels of earnings. The second paragraph will tell you, where support and resistance is, look at the historical volatility term structure to give you indicators of bullish or bearish. And then here on the third paragraph, will tell you the call to put ratio. So at 127, it suggests the stock could be overbought. So this will update, over the weekend and refresh based on, the Friday trading action. But again, if anything's overbought, it will say, look, there could be a reversal, which is why you'd see a red arrow here. If anything's maybe oversold, so this would be the opposite, a high put to call ratio, you'd see a green arrow here. And then this is also cool too, because if you're not really an expert in technical analysis, our system runs the numbers for you on 3 of the most popular tech indicators, which is the exponential moving average, the 14-day RSI, and the CMF, which is the money flow index. So you'll get just a quick, snapshot here, which, all of these are bearish. You see our exponential moving average is moving lower. RSI is kind of kissing this bottom, this 30. And then the money flow index shows this heavy, heavy bearish volume after earnings. Again, my theory here is that all of this is overdone and will bounce here off of support, because look, every time PayPal comes down and kisses this lower line, it's inevitable it eventually moves higher. So I might be a little early to the trade, but I'm confident, long term. And so this will give you kind of those quick snapshots. While we're down here, this is the fundamental information on the stock. So this is all about PayPal. This is the correlation to the market, which you could see, PayPal has some correlation, but it's not perfect at 1-to-1, which, means PayPal can zig while the market zags. And then, here's some data on historical volatility and implied volatility, past versus future. Another cool thing I use from the sentiment analyzer is the price bands calculator. So remember, our option expires 1 week from today. So I could, instead of looking at, probabilities for tomorrow, I would look at probabilities 1 week out and hit recalculate. Depending on what your trade thesis is, you could look as far as 1 year out. You could look as close as tomorrow if you're a super short-term trader. In my case, we went to 1 week because that's the expiration we've been evaluating. And what this tells us is, look, we're looking at standard deviations. And again, I don't want people to get overwhelmed with the math. All this basically means is from PayPal's current price around 62, what's the likelihood that it will move 1 standard deviation from that current price? What's the likelihood it will move 2 standard? What's the likelihood it will do 3? And what this is doing is our system automatically calculates what that means: 1 standard deviation, 2, and 3. So you don't have to do that complicated math. And you can see there's a 68.2% probability that PayPal will be above 58, but below 64. And we kind of saw that when we were playing around with the probability calculator from the options chain. There's also a 95% probability PayPal will be above, 55.99 a share, so call it 56. But below 67. So the strike that we've been looking at is 60. So we're well within, this range. You can also get, very granular. You can say, okay, well, what's the likelihood PayPal will be above 60, but below 62 1 week from now? Recalculate, and you'll get your odds. So, if you're doing a spread trade, for an example, those are where I put in these custom numbers to help me choose my strike price. So, sentiment analyzer, if I come here and I see something that, kind of goes opposite and counter of my trading thesis, it gives me pause. So if this was highly bearish, highly volatile, I wouldn't be looking to sell a put right now. I would say, whoa, sentiment analyzer is telling me not to do this. So sometimes this is great. It either affirms or denies a trade. And then, right now it's backed up my trading thesis. Then I go to the next step, which is P&L calc. And I say, okay, if I do put on this trade, what's my P&L? What's my risk? What's my upside? So, I type in the ticker symbol. I go to the expiration date. So in this case, we're looking at PayPal, the 60 that expires May 23rd. I click on that. This will populate the screen behind me. And this is great because it tells me a lot with a little. On the left, it tells me if PayPal goes to this stock price, on the left column, what my P&L will look like on the right column. So, I could see as PayPal goes higher, because I'm selling this put, our profit, here we go, will be at the maximum profit because we're selling to open the May 19th, 2023, $60 strike put. We're selling one of those for 44 cents a share, so $44 a contract. Here's our implied volatility. Here's our delta, gamma, theta, vega. So again, this is another example. We've had all of this available to us in the options chain, but what the P&L calc does is it pulls these, 5 important measures and it puts it here, just simplifies everything. So from this view, our chart, our blue line is our break-even point, 60, of course. And then anything in green is where we're profitable. Anything in red is where we're showing a loss. Different things we can play with here. We could say, all right, well, what do the numbers look like? Again, 2 days, let's say, before expiration. So you can see our cursor has now moved. All right, 2 days out from our expiration date, May 19th. We could see what happens with our P&L. Everything updates. We could also say, well, what if, there was those 10 absolute changes, increase in implied volatility. So here, this went from 32 to 40, or 33, sorry, to 43. And this, everything will update for us as well. We could also say, well, what happens if we trade 5 contracts instead of 1? And then what happens if we lock in a better price with our broker, 50 cents instead of 44 cents? So these are all the different things that you could change. You could change PayPal's price. So what if PayPal goes down in price, to $60 a share, right? What if PayPal goes up in price, skyrockets from current pricing to 65? So all of this will change in real time. It's really, 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 really cool. Advanced settings, for our advanced traders out there, you could play around with interest rates. how increases or decreases in interest rates will affect the option, how increases or decreases in the dividend will affect the option. So really, really cool things. You can play Fed chairman and chairman of the board under advanced settings. And then let's say that you want to just go back to the original settings, you can hit reset. So, this looks like a great trade. It's right up my alley. The sentiment analyzer backed it up. The P&L calc tells me my risk versus reward. So that's how we would go from, beginning to end, right? Running the screen, adding names to the screen, running it through the sentiment analyzer and the P&L calc, and then boom, I've got my trade. So then I would go to my broker and I would execute this particular trade on Monday using the analysis from IVolLive. So other things you could do within this platform, I want to open it up for questions here in a minute. But the other things that we cover, like in our Tuesday sessions, for an example, on when we do the P&L calc, we'll show different ways and different shortcuts to play with this, because you can, for example, invert the chart. So now we're buying this put instead of selling this put. You could also change that down here. You can also add stocks. So let's say that I do get put on PayPal. What I would do then is I'd sell a covered call against my shares. So I would then, here a couple clicks of the mouse, I'm able to make this, we're buying 100 shares and we'd be buying those at 60 if we were put at 60. And then I'm selling this covered call at 60 for an example, but we would be going maybe to the following week or even to June. And then all of this will auto update as a covered call trade now. So there's all sorts of really, really cool things you could do. We could also look at delta. So if this covered call trade, if we wanted it to be delta neutral, instead of one contract, we'd sell two. So we'd double our income. So we'd make 380 times two contracts versus, having just that one, because we wanted to make it delta neutral. And you could do that with a couple of clicks of the mouse. So this is all great, because then I take this information again, and I go to my broker and I know exactly what to key in for my covered call trade on PayPal. So that is the P&L calc. Next Tuesday, we're going to do the real-time spread scanner. So I would encourage everybody to join us for that, because what's cool about this is an incredibly powerful tool that's constantly running against the market. And it has all of these strategies available for you to screen against: straddles, strangles, gut strangles, calendar spreads, bull vertical spreads, conversions, callers. Naked call would be buying or selling a call. Naked put would be buying or selling a put. Covered call and covered put. So you could start off super basic and run some screens against buying and selling calls or puts. And then you could go more advanced and do some spread trades. So I'll show how to use this on Tuesday to create actionable options trades, kind of that you could do in real time. And you, again, through this tool, we can run this against the S&P, these different groups. We could also run them against our custom group, right? So our May 13th trading ideas. So again, this would be looking for straddle ideas within this new group we created today. We could look at, anything from in the money to out of the money. We could calculate risk reward, set these different parameters, Greeks, hit search. And what this will do is this tool will run it within our group, right? So, now it could be overwhelming if we run this against the whole market, but now we've created this neat little group today, and we just ran, the real-time spread scanner to look for interesting straddles within this group. And then you could evaluate further, just like we saw with the stock monitor. We could choose the ones that we like. We could then copy to a clipboard if we want to play with it with Excel, copy it to our pocket if we want to keep it here within our IVolLive. And then we could, here they are, and then I could evaluate deeper. So I'll run everybody through that on Tuesday. Data download, this is a really good tool. I will say, with the charts available to you within IVolLive, you have up to 5 years of underlying prices. You have up to 5 years historical vol. You have up to 5 years looking at implied vol. So what is probably the most useful here, in my opinion, is options prices. So that tab, I could type in PayPal, which is what we've been covering pretty heavily here. And I could, choose a custom time frame that I want to evaluate all option prices for, because if I want to look at the strategy, hey, anytime, PayPal hits this price, for an example, what would happen if I sold an at the money put option, right? Which is what I'm doing today. So I could then come here, it will tell me the price to get this data. I can agree to be charged that data. I can then also receive daily updates on PayPal, which can be very useful if you have a name that you trade often. So here we go. I would make my order, and then all of this data would be available to me from January to May 11th. As soon as that data order is ready, it'll show up in my downloads, and then I could click on it, download. See, it's pretty quick. I mean, that's already available. And then I could pull that up in Excel or whatever you prefer to then play with and manipulate that data. So this is very, very useful for backtesting purposes. And then each IVolLive account comes with a monthly data allowance. What I've been showing you guys is a real-time account. So, if the market's open, which it is on Tuesdays, you would see all of this updating in real time. But that comes with a certain higher data allowance than a basic account, for an example. So, again, if you're not currently a member, then I would encourage everybody to, if you're not currently an IVolLive user, the best way to become one, shoot us a note at support@IVolatility. We are running a data sale right now, and we're also running an IVolLive sale. So the timing is great if you're not currently a user. But again, shoot us a note, support@IVolatility, and we'll get you all set up. And then we'll explain the different account types. But what I use today is a real-time account, which is great because it has all the bells and whistles and everything updates in real time. So I want to pause now. We are about 55 minutes in, so I like to leave the last 5 to 10 minutes for any questions, comments. It's probably easiest if somebody if you do have a question, just pop that in the chat and I can cover it. Or if we were thorough enough in this overview, it's fine if there are no questions. But all right, thank you for the kind words. I'm glad you enjoyed it, John. Thank you very much for joining us. I know Saturdays can be busy, but I don't know if you're an options junkie like me. It's always a good time to talk options. Great, and I'll have this edited by our team, and I'll send out a recording to everybody. I'll have the team send out that recording so you guys could pull it up at your leisure and make sure you didn't miss anything for the overview. And again, next Tuesday will be real-time spread scanner. So looks like that about covers it. Thank you guys for joining me. Again, this has been Jonathan with IVolLive. Until next time, happy trading. Thanks, Andrew. Appreciate that.